Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, August 19th, 2024. It's 12:41 p.m. Eastern Time as I'm starting the video. Here's what we're going to do. We're going to do a quick update on the stock market. We're trading at the same level we were on Thursday when we hit that level. Again, to me, it's a technically significant level, psychologically important. It was right before the biggest dump that we've had in quite a long time. So we hit it Thursday, again Friday, and here we are today. So no change there. You've got, I gave you some levels to watch on the futures. We're still holding above. As I said this morning, you have to see both the S&P 500 and the NASDAQ break. NASDAQ was below, it's back testing. S&P is still holding support. And when you draw it on QQQ, this trend line, you're still above on QQQ as well. So, well, I should have added that in there that, yeah, obviously you want to see the ETFs give way too. And that's only because you have a certain subset of traders that trade futures. Within there, you have some trading the NASDAQ 100 and some trading the S&P. There's a lot of overlap there. Remember, the small caps have nothing to do with S&P 500 or NASDAQ, but the NASDAQ 100 and S&P 500 do share the top components, and so they're highly correlated. So you need to see that get taken out. And so again, let's not beat a dead horse. Where we're at. We stopped cold on Thursday, and I still maintain what I said on Thursday and again on Friday and again today. This is, although those trend lines will be a sell signal, remember, a rally into resistance it's not a sell signal. However, it is, if you believe that is going to be a turning point or a potential turning point, it is most certainly an objective level to short. So I'm just going to reiterate that. There we are. If we take it out and you've got a gap overhead, a little resistance right there, so forth, so on. But I believe it's going to happen today. I think we'll take that trend line out. It's my guess based on the technical posture. You can go down to a shorter term chart. Here's a 5-minute chart. You can see we're really starting to diverge now on this 5-minute chart, and you're right on the same uptrend line there. You can see how clean it is on the 5-minute chart. So you can replicate it, duplicate it. Obviously, the redder the better if you break down, better if you can get a solid 60-minute close below it, even all the better if a solid daily close below it. So that's it. And let me just show you, let me show you the futures, which I showed you this morning. I gave you ES. This is that same chart from this morning. We're still holding that trend line, so no sell signal yet, just that push into resistance, which is also, if you look here closely, it's the same point on the stock futures where that big slide again. That was the biggest drop in short order. And I want to show you one more thing too, is regarding the recovery. When you look at it on a 60-minute chart, I always say that stocks fall a lot faster than they rise. So when you're short selling, you got to be Johnny on the spot. Long side traders have a little more leeway because stocks tend to fall a lot faster than they rise. They go up slower. And so you can see here, if you look at measure this from the point right before we dropped, there's the peak right here on the top of that green candle. And there's the bottom right there. And that was 4 days exactly. You can see in the bottom of the pop-up box to the left, 15 bars, meaning 15 60-minute candles. And so while it looks like a V-shaped recovery, it's not really a V. It's more like a, this side, the slope's a lot different. It took 14.1 days so far, 72 bars, 72 candles to get back to where it was. So again, that's just an example. And fortunately, we were able to not just sidestep this from our shorts, but turn around and profit, at least for me, and telling you guys if you want to do a good part of it. And this is it. It's kind of like my plan from day one was to, and still is, to get out of the shorts and then start scaling back in. That was a hard exit. There's a big difference. I'm very clear with my words on what a hard reversal is. I mean, all at once, close shorts, go full long. And this has been a soft scale in now for the past 2 weeks. All right, so those are the levels to watch. Again, ES right on the trend line now, getting close. NQ, like I said, back testing from below. And so we just need ES to join the fray here with a breakdown, and then boom, we should get a rejection on NQ. And I'm looking for a red close today. And again, you can see that was the big level right there. Huge drop down there. I think it was 11% plus. In just short order, and we're back to where we were. So again, it's technically significant because it's a major reaction low, and it's not just that level. There was support already, or resistance there, but again, that psychological impact. A lot of longs, whether they're active traders, swing traders, investors, got a nose, bloody nose on that drop, and so therefore they're back to where they were just praying on bended knee. Let it stop, let the pain stop, and so that's why those things again should be. And it was so far it is. Look, guys, we can take it out now. I mean, look, we hit it on Thursday, we hit it again on Friday, we are hitting it again today, and I'll give props to it. I'll tell you what, the resilient. I thought we'd get more of a hard reversal off there. The fact that we have consolidated, maybe there's just too many buyers on the other side of the tape right now, and not enough willing sellers there. And so if they take it out, like I told you, then we start moving up. And what I'm going to do in this video is show you a whole, I have about a dozen longs in the last, started this last week. I actually put these together. Some of them I've already shared with you. And these can be either pure play long trade ideas for those of you that are bullish. And we certainly know there's some of you on the site that are, and that's great, longer term bullish. So they're pure play longs. And they're also hedges because these are have some of the better looking charts. So if you do continue, again, we can pop this level. It doesn't mean we're going to new highs. There's still, as I've repeatedly stated, nothing has changed from the bigger picture. Nothing has changed on the weekly chart. I'm still, unless proven otherwise, this is the market top range I gave you. That I believe is most likely the top, but we'll see. We've got a almost certain rate cut coming up. The market's just now wondering if it's going to be 50 or 25 basis points. And so, like I said, when the reason for covering, being on the 200 days in close proximity plus an imminent Fed rate cut, you're going to see that giddiness come through in the market. And we have. So, like I said, I'm not married to any one view, I'm taking it day by day. So I'm going to show you some hedging ideas. Again, whether you want to give it a little more room on your shorts, if you are scaling back into swing shorts, or if you want some pure play longs. We'll get to those in 1 second. I kind of gave you the update there, what to watch today. Like I said, I'm leaning towards that, get that breakdown. That'll be a sell signal and, should change the near-term trend and very, very much have the potential to cap the end of this counter trend bounce. But as I said, now we have, the next, to open the door to these deeper targets that I gave you a while back before we peaked here, we're going to have to take out the 200s now, especially now that we've already successfully tested them there. And so really a break of the recent lows should do the trick, in my opinion. All right, I'm going to just, for kicks and giggles, even though it doesn't have a correlation to the big caps, I'll cover the small caps here, IWM, show you where what I'd like to see. This was on the 60-minute chart. We put in this divergent high, impulsive drop there. You can see the smallies fell 14% in that drop. And it really started here off this divergent high. So you got a ways to go there. But you do have this resistance level right there. So a little more upside. And we'll probably see some of the sellers coming in there on the small caps if you're looking for. Or look, we're close enough. I'm pointing out the level that will likely cap the rally and bring in some sellers. But it's only 1/3% away. So, it's sometimes if all eyes see a level like that, which is pretty clear to me, the sellers could step in early. So if you're looking to get back in or start a position on the small caps, that would be an ideal level. I still favor the NASDAQ 100, but at some point soon I will probably start layering back in. I can't take that back. I think last week I took some RTY along with it, small amount if I'm not mistaken. But that's a level I'd like to see to start and increase some exposure there. I'll have to double check that, guys. I've traded many different accounts. All right, the next one up for you is the euro. And I'm going to segue that into gold. Somebody asked me in the comment section from Friday's post, which I just saw today, can you update on the precious metals? Absolutely, I'll do that in this video. I gave my 2 cents there quickly in that reply, but I'll expand on that. I don't have super strong convictions, but I'm going to get to that in a second. First, we're going to talk about the euro here. Usually do a pretty good job on calling this one in the direction, and at times I'll trade it, E7 euro futures. This is the EUR USD dollar pair. You can see divergent low, double divergent, made an equal low, kept that divergence going. And the euro trades pretty well to the technicals. So divergent low rally, divergent high correction, divergent low rally, divergent high correction, and of course divergences aren't buy or sell signals. You had divergence building, which the sell signal is a break of support, like a trend line or a breakout above resistance, like a downtrend line here. Ripped up. We started diverging here. You had a little divergent high 1, little shot across the bow, divergent high 2, and here's your trend line right there. You can see the divergence building. I could see the possibility of drifting higher, and I'm going to show you why I'm covering this if it's not really a trade idea. Again, you trade it if you want, if you're a Forex trader, of course. I'm going to show you the correlation to both the stock market and gold. Now, this is a daily chart. So although sometimes I like to say it's easy to get lost in the world of the intraday, 60-minute charts, from a bigger picture, you have this primary downtrend line here. And we're fresh on a breakout above that. And so I know this is a busy board. I've had these lines here forever, ever and a day. Some of these lines are, were set up when we started making these reaction highs. We had this little triangle. Pretty much this is what I see. I know this is my busy board with a lot of lines. You've got an uptrend line there and the downtrend line. So you broke out of this triangle. And so that's what's given this some oomph. So I wouldn't step in front of it right now. Again, there's no sell signal at this point. But an objective short will come. You have a reaction high here, right here. And there was another one there. So we're coming up on the first resistance. I had it colored up a little bit. Let me make it a little brighter so you can see it. It's about 110.98 to about 111.56 is a resistance zone. And so we're getting close there. Okay, why am I talking about the euro? I was just talking about the stock market. Well, let's just show you the correlation there. You can go to edit chart properties, do a comparison. We'll look at QQQ. You can do the same thing with SPY, and you can see they tend to move together. Look at the trends. They're not going to overlay because they're in different price scales. And they go up and they go down together, right? They go up together and they go down together. So what I just showed you is the divergence. So it looks like the upside in this leg in the euro is limited before the next correction. And then that when that time comes, that's where, like I said, it factors into my analysis where I may give a little extra room on the shorts that I've scaled back into because it looks like a pullback is coming very soon in the euro US dollar pair. And it's not just that. We're going to get to gold next here. Let me go back to the comparison, turn that off, and we'll compare it to gold now. Using the same purple color just so it stands out. That's a pretty clear correlation. I think you can see it overlaying right there as well. Both going up at the same time, both going down at the same time, both going up. So, all right, so that's it. I'm going to turn that comparison off. Just go back, show you that 60-minute again, what it looks like. And, in the very short term, I've got E7 futures too. Let's look at those. That's the wedge there. E7, there's the same thing, 60-minute chart. Divergent high right here. There's your uptrend line. So, and it looks like it is a bearish rising wedge ready to pop. So the next time around, we might get one last hurrah, maybe not. It can pop anytime now. It may go up one more thrust up. Hard to say. All I can tell you is this is support, the uptrend line, and this is your divergence line. Just like that was a divergent high. There was our sell signal and started this downtrend line that ended there with that divergent low, like I just showed you on EUR USD, which gave you that rally, which again ended with a divergent high. Trend line break right there. Send it down, ended with this divergent low. All right, you get the point. Watch, rinse, repeat. So you can see what appears to be a likely downtrend coming soon in the euro US dollar, and that will bring most likely gold in the stock market down with it. So that segues us over to gold, GLD. So my reply on gold, somebody said, hey, gold just made a new high. Yeah, it did, but I've told you I've been more of a spectator as of recently. We've had plenty of swing trades in the last few months. I know I'm toggling back and forth here. This is a 60-minute chart. So my reply was gold's still in this multi-month range, and the range is really marked with higher highs. It's not a complete sideways range, and we have slightly higher lows. Let me draw it here. So it's a trading range, but it takes a form of a slightward upward channel. And what I said in my reply is, look, we keep putting in these divergent high in this range. We put in new highs. That was slightly higher than this one right here, and that was higher than that one, and that was higher. But what happens each time, because we have the divergence, it's not a breakout to buy. Again, gold's trending slightly up, but you've gone nowhere. Gold doesn't pay you a dividend like a dividend paying stock would, see where you could get paid if you're in a 1 year trading range. So bottom line is this breakout has a good chance of failing based on this pattern here plus what I just showed you on the Euro USD. I wouldn't right now. There's no sell signals. The euro is in an uptrend. Gold's in a near-term uptrend with a kind of what I'd call a sideways to slightly higher intermediate-term range. Remember where if I turn off all the lines here just to kind of spell it out for you, this peak right here was on, when was that? April 12th. All right, we're already in. It's August 19th today, so it's quite a while ago. And we've gone up a whopping 3%. So that's why you haven't heard me excited about gold as a swing trade, but yet in the last few months, especially back here, we were just slaying this thing with impunity, long, short, hitting these targets, final targets, reversing off the divergent lows, hitting, all three targets there, pointing out that divergent high. So that's it. And right now I don't have a clear uptrend line in which to trigger like we did back here that trigger a sell signal. So I just want to say based on the divergence, and that's the 60-minute chart. Here's the daily chart. Like I said, divergence, I always say is not a sell signal, but they are conditions that indicate a trend reversals likely. And so although gold, you have it at new highs, it's a marginal new high, just slightly over that one, which was slightly over that one, which was slightly over that one. And again, you saw what happened each time. Each of them had divergence. They're just bigger and bigger. It's the same divergence on the daily. It's been building, building, building. There's the uptrend line. It's a likely target. So there's your update on gold. I mentioned a couple weeks back, I like silver actually had a better looking chart. Silver was at support here on the 60-minute chart. I showed you on the futures actually is what I was showing you. But coming off that divergent low, and it's done pretty good. It's lagging behind gold so far. There's what this is. Yeah, this is what I was showing you here a couple weeks back. So it held that support level. So that one looked better, and it did rally. It's nothing huge, but we're coming up to this resistance level here, 29.64. So like I said, it's going to ultimately follow its big brother gold. You can see again, it's been weaker in this trading range compared to its recent highs. So that's it. I'm probably spending more time than I wanted to, but I don't mind. You guys, that's what you pay me for, my analysis. Feel free to bump me for updates. I just don't have strong convictions on it right now. And, it's also been, with gold and silver, there's that correlation to the stock market, which is, as I showed you earlier, related to what the dollar and the euro are doing. However, I saw, in the breakout of gold, as bullish as it was a few months back, tons of retail money piled into there. And the market put in evidence of a likely top. It's also one of the biggest drops in a while. Stocks, you could see what happened in the unwinding of the margin bubble, the carry trade, stocks were crashing. And so the same folks that are chock full of, stock market have a lot of money, in gold. And so if we do get another leg down in the stock market, that's probably going to put force selling pressure on gold. You might think gold should go up in a fight to safety bid. Sometimes it does, but sometimes it doesn't. Look back at 2008 when everything was melting down. Remember when your broker knocks on the door with that margin call, you sell what you have, and if you don't sell it, they do. So if you got a lot of gold in your portfolio along with your Nvidia, and your Nvidia is crashing down 30-40%, you might love your gold, not want to part with it, but it's not your call unless you pony up some more cash for them. They're gonna liquidate you. And just a quick update on Natty. I get one out this morning. Nat Gas, perfect. This is the swing traders chart, the 120-minute chart. I also gave you a 60-minute for more active traders with micro targets, and then the UNG. So that's it. We hit T2 almost to the button, perfect, and as is the case often, you pull back, and we had some divergence, but remember, this is small divergence off a much larger divergent low and long-term support and all that. So although I believe that's, the correction's over. Once we pop that previous high, that should seal the deal and take us up. The previous high right at T2, which is was just a hair above. You can even see it on the video. Probably have to zoom in right there. And then UNG was right at it too, I think. UNG. Remember, these targets don't always align. I put that on there. Best to align your UNG targets with those on natural gas. So that's why the numbers don't, they're not, I don't sequence the numbers. I'm just looking at the chart here. T3 was hit, but you can see on T3 when it was hit, we went a hair above. So I'm going to just show you, you want to put the line right there. And it also coincides with that reaction high right here. So the level to pop, if you're just a UNG trader, 1525, that should do the trick. We'll have divergence if it happens soon, but again, we're coming off a big divergent low, so that should carry us on up to those targets there. Okay, I'm going to start out now and just wrap the video up with give you a handful of long trade ideas. Like I said, animal spirits are back with the whole, Powell's going to cut. He's going to be talking on Friday at the Jackson Hole meeting, indicate, maybe give some colors to what might be coming down the pike on the September meeting. But either way, going back here, this was one of my top picks for you, and still looks good, and that's why I'm highlighting it. Still very much alive. MKTX, as I mentioned, this was the last update I gave you. It's been a while, and the video was on at least June 6th, so it's been a couple months there. But we had just broken out and back test. It was a breakout, and I was highlighting the back test of this trend line here. We also had a bullish engulfing candle, and I went on in that video to tell you that not only that, but an additional reason, because they benefit from bond trading. That's their big thing. They're into the electronic exchange or whatever, bond trading. And I said, so an added plus, or an additional reason to be long MKTX was that treasuries had just broken out. This is TLT, the 30-year bond right there above this downtrend line, and that was bullish. So I expected yields, treasury bonds to go up, yields to fall, and that's when they make money, when everyone's buying treasuries. I showed you that in that video, and to support the case, what I'm doing is, like I like to do is, the charts. This is the reason to go long, was the charts. There's the breakout, the back test, still within, right in that same level. And it's been moving up nicely, but we are getting some divergence now forming here. And we hit that 239.60 target. These were the targets I laid out for you. It's tough. It's tough. I actually closed it out last week. I don't know if it's going to make it up to this one or not. I can tell you this: if it breaks the trend line, I would have a stop below there. It's been somewhere it was highlighted last was right here around the 200-ish level. Been up, it's up about 19% or so, or was recently. There's a trend line right there. What I saw here on the 60-minute, we had a minor trend line break right here. And so that was the red stop out candle. If we go below there, 228 was the first target, 228.50. It's now, I should move the line down a little closer to 227. Maybe price support in the 200 days. That's the other thing. It took out the 200 days. That's bullish. I would stop out there if you're in it still. And it can easily go up to these targets, but that's going to take increased interest in bonds. I don't have that degree of confidence on. Let me show you what I'm talking about. So back then, that was the breakout was on June 6th, the last update. I'm sorry, the last update on this one. And there was the, gosh, is this the board I had? Yeah, there it is. There's the primary downtrend line. There was a breakout on June 6th on bonds. We back tested, and this is again a long-term primary downtrend line, and TLT's been moving up. So this right now, you can see we peaked right here recently. We had a reaction high there. We almost hit that reaction high there. And this whole level right here, I've had it forever and a day, 98.83, is pretty significant resistance on TLT. So the bottom line is, I think all of this was the whole, okay, increased chance they're going to cut rates. Remember, the Fed doesn't cut the 30-year bond rate. They don't even control the 10, not even the 5-year rate, not even the 2-year treasury. or even the 1 year. Those are controlled at, they can play around, and call Yellen and ask her to, control the, what they're offering and what they're putting out there, but they only control the federal funds rate. The Federal Reserve does, that is. Treasury can, they sell the bonds at auction, and the market's going to set those rates. So the bottom line is we saw a drop in rates from the abatement of inflation and expectations for a rate cut, but I think most of that, possibly all of it's priced in. So therefore, MKTX is probably at the tail end of their run there. Now, if I'm wrong and something else goes on, and now one of those things would be the stock market just taking a complete dump. And that's going to happen if and when we take out the recent lows, as I just said. That'll open the door to my next targets. And what's going to happen then is long-term rates are probably going to go down even lower, forecasting, baking in a recession. I think when the last week's lows go, or the week before, whatever that was, we bottomed out in the stock market, and we get another big slide down to my deeper targets. I think at that point a recession is going to be baked in the cake. That'll be the talk. I think it's already here. There's a lot of things that indicate that it's probably already started. And that could see a lift in rates. So like I said, I don't have a position in Treasury bonds. You know me. I love trading them. Over the last year, especially earlier this year, we're trading long and short, ZN, ZB, TLT, the futures and the 30-year bond and even the 10-year bond. All I'm telling you right now is just kind of talking about that MKTX and treasuries as a whole. So kind of like gold, I just don't have a strong position on or strong convictions on where treasuries are going. Let me give you the other one I gave you recently too as a long-term, one of my favorite bottoming plays, and also a hedge. I mentioned if you're short the semis, you're going to look to short the semis, get back into a semi-short Intel. At really, really nice long-term support. This goes back many years right there. And so I highlighted it for you here at that 1930 support with big positive divergence. Remember, Intel I also highlighted back here based on the same thing when it fell there. It's one of my top picks. And also, if you were short the semis, like I said, this is an indirect hedge. It is a semi. It used to be the king of the semis, obviously long since dethroned by NVIDIA, but it's beat down, big positive divergence, and that support, and it's actually outperforming, I believe, outperforming the sector recently. So, like I said, I don't even have a single target until back up here about 24.92, where we bought it last time here. Actually, we had too long. We bought it off that level twice. Got out, hit the target, got out, got back in. Next one up. Let me flip my notepad here. Okay, so those are just updates, the ones I already gave you before. I'm just going to rifle through some, and these are going to be contingent on a lot on the stock market, especially this one. This is one of my tells, if you will, of the economy. This is UPS. When you have the stock market coming off, fairly recently off all-time highs, yet you have UPS, which is one of the best indicators, leading indicators of the economy. Why is it down here? Either way, it looks good now. This thing's come off the top. This down almost 50% at very good long-term support. You can see it right here. Right here, major reaction lows. When we broke out, we didn't limp around, meander on through. No, it was an explosive breakout. That helps technically validate how significant that resistance level was. Resistance, once broken, becomes support. Okay, that's it. Target, you have a potential bullish falling wedge that, minimum go up to the wedge, and then once you break out, again, this almost certainly, not guaranteed, but almost certainly for it to hit these higher targets is going to entail the stock market to go to new highs. It's very unlikely we're going to hit my deeper downside targets on SPY and QQQ and see UPS rally up, let's just say, what is it, from the support here up to that 156 target. That's 25%. It's possible, certain possible. And again, it's a way to hedge. So, if you're long UPS and the stock market does go up, if you're short the market, then you're making money on UPS, you're making money on Intel. And if I'm wrong and the market does break to new highs, this one I have confidence will outperform And look, there's also the 200-day moving averages, which come right in there. So that's just your initial target. And from where we're at right now, you're talking a run of about 10% just to get to that initial target, which is the downtrend line, the 200s. And that's a weekly chart right there. Again, this is a daily right here, divergent low. I might have floated this one to you, unless I put the lines here last. I might have just did this last. Yeah, I did this. No. Oh yeah, I might have floated out already because I created these lines back on July 23rd. T1, T2, potential T4, downtrend line right there, and price resistance. Okay, moving on. PayPal, PYPL. I've been watching this one forever and a day. I have a price alert set, 70.69. It looks like a big old fat basing pattern here. It's been consolidating under that key, very significant resistance level for quite a while. Again, about 7. I have it at 70.69. First target, if it pops that, and it looks like a potentially explosive setup. It's moving above its 200-day moving averages, although it's been slicing through them recently. I would say if it breaks that level, it's probably going to blast on through there and continue on up. It might have a little reaction there first. Let me pull it down a little. I'm going to put it there at 77.23, close to that reaction high. I think it could easily run up here at about 89, and that would be a run of 28%. Now, it could possibly do more if the market's going to go to new highs and beyond, not just a marginal new high and a dump. Anyways, just a setup right now, not an actionable trade because it's in a trading range. It's dead money. It's been dead money at least. MDB, this one, I went through this sector, software, infrastructure, various software stocks, and I noticed this one, it just trades really well to the technicals here. You can see a divergent high followed by a drop. Divergent high, there's your trend line break, little kickback rally, just like the one going on in the stock market now, which came, back up. This is what happened. You break down, you usually have a reaction somewhere along the line, counter trend bounce, but it went all the way down here, ended with a nice big old divergent low, set up a big rally, ended with a bearish rising wedge. There was your uptrend line, boom, there was your sell signal after the divergent high you broke, and this one fell from that point down to here, which was price support, about a 50% drop. You can see the reactions there, and put in a divergent low. Now it's come off that divergent low. I wish I would have saw this, a week, 2 weeks ago when I covered shorts and went hard long. I would have gone into some of these individual names like this one, but I didn't. Either way, I'm sharing these for those of you that are looking for long side trade ideas. You can see first target there, and then the downtrend line. Then you have your 200-day moving averages that might want to run back to in a huge gap. Again, it's most likely going to take the Q's, NASDAQ 100, which is a tech-heavy index, to go on and take out the recent highs and go to new all-time highs. That'd be my guess. But again, I'm sharing these setups. You decide what to take and what to pass on. NTNX, I put a little question mark by this one. Again, it's in the software sector. Keep an eye, if I don't mention it, check these all for earnings. This one's telling me August 28th right there. The story on this one, you had a nice clean uptrend line. You can see it there. Beautiful bearish rising wedge, divergent high, my kind of setup there. Broke down, took out then the longer term uptrend line right there. And just recently it was diverging. It has been diverging, but in positive divergence. However, I'm not taking it. Look, it's right here, back testing the 200-day moving average. Like a lot of these tech stocks, they love that 200. They come in and buy it, buy it, buy it. Keeps the uptrend going as long as you're above it. But when you're below it, so I'm just pointing it out for those looking for something that if you believe we're going to new highs, and some of these companies that put in big divergent lows recently. But that's the nature also of a bear market. Once you put in a major top, it's like a bull market in reverse. Bull market, you get these little divergent highs that play out, but usually for relatively small pullbacks and or rallies in a bear market. And so this one, you got a counter trend bounce back to the 200s. You can also view that as a short. And if you can short it here at the 200-day moving average, that's the exponential. The 200 simple is just above or on a back test there. Or if you're long and strong, if you think this one's going up and that's it, and, this stock dropped off the highs recently, 42%. buy it and just put a stop strategically. I would put a stop below this green line right there. I think that's a decent support level. That's not the next one. The next one was WDAY, Workday. You can see here another one that just trades very well to the technicals. You had divergent high 1, 2, 3. It was that last one that did the trick that sent us down here. There's a great example too of, you get the divergences once the top is in, you get a divergent low. They're good for a rally, but guess where this rally stopped? You got it right in the 200-day moving averages. See the blue and red lines? It capped the rally there, put in a divergent low here, rallied up, went around them, finally took them out. Took out the 200 simple and exponential there, back tested them, they bought it. Back tested it, bought it. Back tested the 200s again, bought it. Back tested again, one more buy, and then poof, gone. So to this one, although I'm pointing it out, if you are a bull, you got your divergent low, but I think it's going to be like this divergent low. That's why I have that purple circle there. So if you think the market's going to new highs, you want to buy these stocks that are beat down. If they're quality companies, you look for the divergent. Oh, and at support too. I wouldn't mention it if it was just a divergent low. It's a divergent low at support, 202.50. However, you've got the 200-day moving averages just above, likely to cap any advance. And this will kind of be a tell, guys. As I go through these stocks, I may not follow up on this one again. I'm not in this one, but if I follow up on it, I'll watch it. And if I see things like this start to power through their 200-day moving averages, especially after a test or two, the more and more, I've done this for you recently. I don't have this chart queued up, but I'll do it for you right now. Okay, here it is. Here's my NASDAQ percent of stocks trading above their 200-day moving average. So at the 50 level, that means half. This is a bounded indicator. You can never have more than 100%, nor never less than 0. You're never going to go to those extremes. That would mean every single stock is trading above. So, but the high end, as you can see here, is about 80 extreme, and the low is this number. You can also see my annotations. I've shared this chart many times. This is where bear market ends. There was the Great Recession, the last true bear market, and COVID, right? And you can see in the October 2022 lows, we didn't get there. We had positive divergence, which is a good sign on the indicator, indicative of a bottom. This last drop here, and even that spike down there. So this, along with a lot of the other indicators I have, show me that we haven't, there's going to be a lot more downside. And this is where you want to start looking to buy stocks when you get down to this extreme. And I'm talking 401k type stuff, not active trading. Well, always that's long, short, long, short. This is, long-term stuff. But what I wanted to show you is there are a lot of takeaways using this chart. Number one is divergence. Up above you have the NASDAQ, which you can see going up. We're fresh off all-time highs, or marginal new, but still a new high. And so as prices were rising, you could see the divergence here in the percentage of stocks trading above their 200 average. It supports the case that I've been saying for many months now, showing you that just the atrocious breadth, horrible market breadth, market halitosis with, fewer and fewer stocks, namely the big tech, the, NVIDIAs of the world, distorting and giving a false guise of strength to the stock market because of the market cap weightings. And this shows it. And so here we are, guys. We're fresh off Delta. We only ever so briefly traded where half the stocks in the entire NASDAQ were trading above their 50-day moving average, and that was very brief and fleeting. And so all along now, since this rally off the 2022 lows, we've just had that and this is what I'm showing you, is that the majority of stocks are below their 200-day moving averages, and that's a level that delineates bull and bear trends. And so that's where we're at. And so if you're wondering, okay, why did I, reverse recently, cover shorts at that low a couple weeks ago and go long, if so many are below there? Remember, it was, if I'm trading the NASDAQ 100 futures, it doesn't matter if the vast majority of stocks are sucking wind, because the NASDAQ 100 futures, or QQQ, are really just Amazon, Apple, Microsoft, NVIDIA, and Meta, and that's what comprises almost all their returns. And those are the stocks that fell back. Those were the ones above their 200 that went back to it. So that's that. So when you're trading these individual stocks, I just want to point that out. And you can see again how well this thing has been defined. I'm just going to draw out the 200-day moving bull trend. We broke it there, broke the 200s. These are the 200s there. Define this whole bear trend, and we're below it. And then we took it back there. There's a 200 right here. This red line I'm going over is the 200 exponential. And the traders bought pullbacks to it. So there it is, guys. So I'm kind of showing you glass half full, glass half empty things. The bull sees the divergent low, sees a reversal off support, and expects the market to go new highs. I think this one will outperform. I think it will ultimately, if that's the case, if the market's going to new highs and beyond, this one will recover the 200s, and then that would be a bullish event. However, I expect it to fail there most likely. All right, SNOW, a few more, and I get the ones down at the bottom get a little better, by the way. I was just this is the last in the software sector. Look at this one. I found it last week. You can see that trend line was created on the 15th. But it just broke out today, triggering. This is the only one right now that looks, I would say, is a buy signal today. Again, am I taking it? No, because of my outlook on the market right now. But that's not my job. My job is to share trade ideas, both bullish and bearish. So where can it go? And this one could, NASDAQ could fall. This one could still rally. That's the first target at 143.50. It's going to be about an 8% run if it gets there. And it's just, like I said, just breaking out today. On volume too. Well, maybe not on volume, but impulsively. I have to check the volume on that one. All right. 4 more to go, guys. So HUBS. Hubs. This one's actually looking even better. This is, we're still in. This is probably the last software stock. You got the long-term uptrend, primary uptrend line, positive divergence right there, coming off that level. At that previous high now, if it can pop that, it might want to run and back test the 200-day moving averages up there. And again, that's another software stock. So that's if the rally in the NASDAQ has some teeth, these guys will probably play a game of catch up here. All right, now we move on to retail apparel store Lululemon, coming off this big old divergent low right here and just breaking out today. It's another one I found last week, created 815, that trend line. Yep, and breaking out today. Let me draw something here, which I need to add. There's a big old gap right here up to right there. If it can pop a little bit higher over today's highs, you can see it's tried to pop into the gap ever so slightly. So it's going to need to do that. It's going to need to power up a little bit more over 262 or today's highs. And then this one could trigger a short squeeze, especially if the stock market continues higher. I'm going to move that line. I didn't mark up all of these for targets yet. I'm going to put that first target right here for you, even though the gap backfill is going to come before that. And then these are old levels on this one. They were short levels on the way down. We had a trend line break here, and they were downside targets. All those hit. So now in reverse. And that's, big brand name. You guys know Lululemon. My wife certainly knows them. Cisco, break above a downtrend line. I've been watching this downtrend line for a while here. Created that one back on August 5th. Okay. Oh, I had this one here before, longer. This one created back on August 5th, and it recently popped above it and broke out. And it also took out in one fell swoop the trend line and the 200-day moving averages. That puts it in a good technical posture. It ran into resistance, my first resistance there, 50.20. So if it can pop that, then that should open the door. Some of these are older levels. I'd say probably going to run up at that previous high. Again, Cisco, big tech company, obviously conditional on the market not melting down, especially the tech-heavy NASDAQ, but one of the better-looking ones, as long as it stays above the 200s in this downtrend line right there. And I think that's it. Yeah, the only other one I want to update is the SMCI. This one back here, several short entries I shared this right here before on that candle right there. Figuring that was a buying climax. Short again on the wedge break there, and several since then, giving you back then one sole price target, which I still maintain. Just keeping it simple. Now, I did tell you that I posted clearly. I covered all shorts across all accounts recently, but it's starting to look good here. I've got, at this point in time, my allotment. I haven't yet added this one back. And I may miss the turn, because here's where I think it's going to stop. This was a big level right here, big support level, 160.46. We broke it there. You've got that. You have the 200-day moving averages, the exponential in red right here, and the 200 simple in blue. And you have this big old gap, which so far has capped it. So that's the scale in short zone. And again, to me, it's just a function of having at this point in time, I want to see reversal off these levels. I want to see those sell signals I gave you today, which haven't yet triggered the S&P 500 ES break, and QQQ needs to break that short-term uptrend line. And then I will most likely add this one back for the next leg down. There's a minor uptrend line as well. And so from where it is now, from the bottom of that gap right there, if that sold price target is hit, which I will probably add additional targets, that's a 44% drop. Remember, this thing's already down until the recent lows where it back tested this trend line. It was already down 61%. So it was an excellent short trade. I'm going to be getting back into this one soon, most likely, I take that back. Unless we keep pushing up right now and blow through these resistance levels. I told you last week on Thursday, I was going to give it a little bit of room, but not a lot. And then at that point, reassess and see if I'm going to start scaling out. Or the reason I just did this video is I gave you a bunch of longs. I might take some hedges, especially in the tech sector, if I can, and give it a little bit more room to avoid a stop rate. Because like I said, there's a lot of evidence that a top was most likely put in. And I think we're at or very close to a level where this counter trend bounce in the market runs its course. But either way, even a standalone is this one here. But you're going to need to see this one tends to follow its big brother, NVIDIA. So you're going to need to see the market reverse, and the market, especially QQQ, is not going to reverse until NVIDIA reverses. NVIDIA is still up, walking up that uptrend line I gave you right here. Like so many stocks, including the indexes, have these primary uptrend lines. So when the majority of these go, SPY, QQQ, NVIDIA, you start seeing red sticks down through there, that's when the gig is up and the next leg down will most likely begin. And we're right on the line. Like I said, I think it'll happen today. Hasn't happened yet. We're still kind of holding up. We're still positive on the indexes all day, but that's because the ES is riding up that trend line, and QQQ is as well, even though NQ is slightly below its comparable trend line. There's QQQ on the daily. And then as earlier in the video I showed you, there's the trend line right there on the 5-minute chart. So it's that simple. I already believe I have an alert set. I'm watching these like a hawk anyways. Boom. Wait for that to go. And then the one on SPY and ES as well. I don't have it near SPY right here. I give it to you on ES this morning. Right there. That's the trend line. So when all these alerts trigger, oh, I didn't mean that. I meant to do an alert. When all these alerts go off, that should be it. We should turn around. If it happens today, it needs to happen with enough time before the close. We get a red day. If not, it'll carry through to tomorrow. All right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.